Well, I think we're ready to get started here for the deep dive, the first Monday of 2022. It's January 3rd, and welcome to everybody joining for the deep dive this morning. Glad to have you on for this first deep dive of the year. So we're going to talk about the housing market, just do an update to, kind of give you a lot of things happening right now and an update on interest rates. We're going to do talk a little bit about forbearance, talk about prices and demand, what's happening out in the market, so that you are the most educated agent on these topics going into the new year. Make a video, get this content out there, and really give your buyers and sellers the confidence they need to transact in this market. The last several weeks, as we wrapped up the year, we talked about inflation, a big topic. So if you missed that, you can go back in the KCM member area and watch that video of the deep dive of really housing as a hedge against inflation. We talked about, coming into this year, Kate brought the topic of the changing way that people are looking at home ownership, the non-financial benefits of home ownership. Again, if you missed that one, go take a look at that. Let's jump into this. And I'm going to start with interest rates to give you a little perspective on where we've been and where experts are saying we're going. So let's talk about this and get started here. Mortgage rates continue to move sideways heading into 2022. If you think about this, we've been talking for the last several months, rates are going to rise going into the new year. But you read this quote here from Sam Cater. It says, mortgage rates have effectively been moving sideways despite the increase in new COVID cases. Now, I'm not here to say, things are changing and we're not expecting them to rise, because we are, but I do want to give you that perspective. He says this is because incoming economic data suggests that the economy remains on firm ground, particularly in cyclical industries like manufacturing and housing. Moreover, low interest rates and high asset valuations continue to drive consumer spending. And while we do expect rates to rise, there's that little clip there, the push of the first-time homebuyer demographic that's been propelling the purchase market will continue in 2022 and beyond. So the average 30-year fix, you see it there, 3.11%. He talked about it been moving sideways, and this is what this looks like graphically. If you look here, the move sideways has been, I kind of painted it in here in this black arrow, since about September 30th. At this 3.1%, maybe a little below it, maybe a little above it, but kind of hovering in there. Is still very, very good financing for a home right now. And so that's the educated piece that I want you to have. The experts still are looking at it saying we're going to see interest rates rise in this year. As we go throughout 2022, this is the most updated look from Fannie, Freddie, MBA, and NAR. And you see the average of all four on the right from the first quarter to the second quarter, third quarter, and fourth quarter. Here's the bottom line. What I see right here with experts is sometime by the end of the year between 3.5% and 4%. Now, I'm not here today to try to forecast or tell you exactly where rates are going to be, but I do want you to have the perspective so that you can be the educator on what's happening with rates. Long term, I think the picture is that rates are going to continue to go up as the economy improves and we go throughout this year. Certainly what experts are saying. We'll have to see how that plays out, but no doubt that's what's on the horizon. And if we think about those clients of ours that may be wondering, should I buy right now? What's happening with interest rates? We can give them this expert opinion from experts on interest rates. The bottom line on this, though, Odetta Cushy says that, well, housing prices and existing home sales have historically been resilient to rising mortgage rates. So any of the talk of interest rates are going to rise and the housing market's going to shut down just simply isn't there historically. Here's what I know. Experts are saying rates are going to rise. Right now, rates are really, really good at 3.1%. Even as we talk about a rising rate environment, to be able to buy a home at 3.5% or even 4%, great historically speaking for interest rates. I think as we go throughout the year, this is going to be a topic that's going to continue to be talked about in the media and other places, and having the expert perspective on that is going to be key. If you're a KCM member, you can go grab all these slides in the KCM member area and use these to shoot a video. Use these as you're explaining what's happening to the clients you're serving. Let's take the next topic. I'm going to hop to the next one. I mentioned it, forbearance. Forbearance what was given to homeowners last year, or actually in 2020, starting out in 2020 with the pandemic, to survive and get to the other side of this. And forbearance has finally fallen below 1 million active forbearances. You can see here as of December, 890,000 mortgages in forbearance. That represents about 1.6% of active mortgages. So you're starting to see this in the news. You're starting to see it in other places that this wave of foreclosures simply isn't coming because of all the options that sellers have in today's market. If someone's in trouble, they can go and sell their home and put some money in their pocket, where they couldn't do that back during the housing crisis. And so having the expert opinion here of what's going on is critical right now, because there may be people still thinking, we're going to see a lot of foreclosures, I'm going to wait till there. Well, if that's what they're waiting on, then I think they're going to have to pick a better plan, and we can help them see that. If you've been following the deep dive or following KCM for quite some time, we've always kept up with what's happening to people coming out of forbearance. And I'm going to give you that here in just a minute, because they stopped doing it weekly. We used to get the data weekly. Now it's monthly. The short story there is it's monthly because it's not as big of a deal going into the new year. So the most recent information as of the end of November, loans exiting forbearance. This is everybody that's exited forbearance going all the way back to June 1st of 2020. And so let's take this pie graph. I'm going to walk you through it. If you haven't seen it before, if you have seen it, you're well versed for this. But the green area, those 38.6% of the loans were paid in full. They either made their monthly payment, they paid their loan off, or their past due payments were brought current. Now, I've always said I don't think these are people that took forbearance and didn't took it incorrectly. They said, I don't know what tomorrow holds, and it ended up they didn't need it. They didn't need forbearance, and they were able to be whole coming out of it. 38.6%. The next section, the blue section, what's happened there? Exactly what we said. It's become the biggest section. 44% have gone through some kind of workout. Either they've gone through a loan modification or some type of deferral. They've tacked it on the end of the loan. But the bottom line here is 4 out of 5 people coming out of forbearance either didn't need it or went through a workout. They came out whole. And I'm not saying everybody there is not going to have an issue. They could, clearly. But what's different today? The equity in homes across the country means they can sell it, put some money in their pocket, and move on and do what's right for them, for their family, whatever their situation may be. 17.4% are still in trouble. Those are the ones we're not saying they're going to go into forbearance, but they either don't have a loss mitigation plan, or they're in some type of short sale or deed in lieu. Now, experts, this is starting to get out that we're not going to see this wave of foreclosures in the new year, and certainly people are starting to hear that. But I found an interesting quote from CoreLogic that I want to go over with you. Mary Bolton Smith says, senior research leader at CoreLogic, we may see a little bit of an uptick in foreclosure rates in 2022. Excuse me. Just an uptick, though, from an extraordinary low level, and we're not expecting to see a big increase. We expect delinquency rates overall in home mortgages to actually continue to remain quite low. So going into this year, CoreLogic's saying the foreclosure rate's going to remain low. It's important piece of information to keep in mind as you're talking to people and they're wondering what's going on with the foreclosure rate. And again, I'm going to point back to what we've done many times here on the deep dive and at Keeping Current Matters. The equity in homes today across this country is giving people a lifeline that they didn't have back in the housing crisis. Let's talk a little bit about demand and prices right now. As we kind of wrapped up the end of the year and the holiday season, Showing Time came out with their year-over-year demand. Impressive year-over-year demand seen all across the U.S. Coming out of Showing Time. On the average across the U.S., year-over-year demand heading into the holiday season, which is the most recent information that has been published by Showing Time, up 12.5%. And you see that kind of consistent across the Northeast, Midwest, and South, and the West there being lower. But Michael Lane says this: showings traditionally lag during the holiday season, but the data we're seeing tells us that buyer demand remains strong. So, coming into the new year, coming through the holiday season, buyer demand is remaining strong. And, as I look at forecasters going into this year, they're forecasting buyer demand to continue throughout the year. He goes on to say the fact that every region showed a year-over-year increase indicates that buyers are undeterred by the approaching holidays, and it speaks to their desire to keep searching for their next home. I think sometimes even with, the world that we live in right now and some rising COVID cases and all that's going on there, we may think, people aren't out there, but they are out there. And I would encourage you to share that with those that are in your office that may be saying, well, there aren't folks out there. There are many people right now that have a need and have a reason to want to transact, to sell, to buy, and be in the market. If we think about that, prices are forecasted to continue to rise going into 2022. I want to give you a graphic here that came from NAR's most recent year ahead forecast. It comes from 24 different sources from people all over the industry, and the mean of appreciation 5.7%. Now, this is a little bit different look than what we've had traditionally when we looked at pricing. If you remember, that was about 5.2% across some of the other indicators we look at, Fannie, Freddie, Zelman, all those that you're familiar with. But I'll tell you this, I'm starting to see forecasters start to lean more to the high side. I think some of these forecasts are going to be up-leveled going into the new year, and we'll see strong appreciation. Not what we saw last year in 2021, but certainly stronger appreciation than, call it 5.7 or 5.2%. I think that's important. Let's go through a couple quotes here, and I'll leave some time at the end. We'll do questions here for this first deep dive. Odetta Cushy says this: increasing house price appreciation may encourage existing homeowners to use that equity to purchase a larger, more attractive home. A dynamic known as the wealth effect of rising equity, which is already happening to some extent. So, what I would be talking to people about right now is that on average, homes appreciated by over $50,000 last year. You can go out and get the most recent CoreLogic data from KCM. You can go look in the last couple of weeks of deep dives. I used it there. You can go grab slides. But I would start there. I would talk to people that are thinking about selling or might be thinking about trading up or moving down, that there is equity in homes. People are starting to think, now may be the time for us to do that. Several weeks back, I talked about the pinup selling demand in the market, given the drop in tenure in homes across the country. It's alive and real, and that rising equity, that wealth effect, is happening all over the country. Here's the bottom line from CoreLogic. So overall, I do think 2022 will be another strong year for housing, albeit a little bit higher mortgage rates, and we do think home sales will continue to rise and actually reach a 16-year high in 2022. As we get ready for the new year, my hope is that you are the educated agent that helps your clients feel confident about buying and selling a home in this market. I want to make an invitation to everybody on the call that's not a KCM member. Starting out here in January, we'd love to have you on as a KCM member. You can go to trykcm.com, start a free 14-day trial, and get started. Use all this information to be the knowledge broker to the clients you serve. So if you haven't done that already, go over there and do that. If you are a KCM member, know that we are grateful for you. We're grateful for you in this new year, and thankful for that. So Jessica, I'll invite you to come on. If we have questions that we want to cover right now, we can do that and get those rolling.
Hi, Dave. Yep, we have just a few questions today. Sabrina Shaw said, great info. Where could we go to research data in our local markets to personalize our deep dive to the public?
Absolutely. Great question. And I think that is the key, is taking this macro US data and bringing it to your local market. So going into your MLS, you're going to be able to see actives, pendings, everything like that. You can look at the velocity of the market and say, where are we at from from an activity standpoint? So I think it really depends on what you're looking to convey to the folks that you're talking with. But I would go straight there and I would pull the data out of my MLS And I'd pick a few things. I wouldn't try to cover everything, to say, this is what I see happening in the market. Bring the US look, here's what's happening in the country, but here's what's happening right here where we are. It's a great question.
All right. And then the only other question I see right now is from Edson, who asked if these slides are available in other languages.
They are available in Spanish. So if you go into, if you want to email me, david@keepingcurrentmatters.com, I'll happily get you over to Jamie on our team. She translates everything into Spanish. So all these slides, that's one benefit. I don't know how many KCM members know about this. Everything that we publish from KCM is done in Spanish. I probably shouldn't say everything, but the monthly market report is in Spanish. Blogs are in Spanish to be able to use those. So you can send an email over to me or look inside the member area of KCM and you can grab those in Spanish. Great question. Any others, Jess?
Nope, I think that was it.
All right. We'll wrap up on that. As always, thank you for joining the deep dive. We're grateful for it, for you joining. Happy New Year to everybody out there. We'll see you back next Monday. We're on at 11 Eastern. So if it's your first time, we're grateful to have you. Invite somebody else, and we'll see you back next week. Take care.